So we've talked about, we've done a general overview of Canadian taxes. We've talked about the income streams that flow into the taxable income bucket. We've also talked about credits and deductions. Now, in this last segment, we're going to talk about compliance. What does compliance mean? Compliance means that you have fulfilled the requirements that are upon you as a Canadian resident. Canadian taxes, unlike US taxes, are based on residency. So whether you're a citizen or not, as long as you are considered to be a factual resident or a deemed resident of Canada, you are required to file a tax return. Filing a tax return is the first of your obligations, and your tax returns are due to be filed with the CRA by April 30 of every calendar year, when your primary source of income or when your income is predominantly employment income. However, if you happen to have business income or property income, you have till June 15 to file your tax returns. But in spite and despite the fact that you have till June 15, it is expected that by April 30, you would have remitted all taxes due to the CRA, i.e., you have made the payment. So whether your deadline for filing is April 30 or June 15, you're expected to have made the payment by April 30. That's the first thing. Now, the second thing I want to draw attention to is the fact that if you happen to be receiving benefits from the government, whether that's the Alberta carbon rebate or whether that's the Alberta climate action incentive, which I think that's the old name for the carbon rebate, or whether that's the Canada Child Benefit, whatever, as long as you are getting any kind of money from the government in the form of social assistance, you will only continue to get those benefits as long as your tax returns are filed. If you do not file your tax returns, at some point the benefits are going to stop coming. And if you are dependent on that, that's not what we want. So if you have tax returns outstanding, get them filed. That way you keep the benefits coming, and that way you do not suffer any undue interruptions in your lifestyle. So now that we've gone through all of these sessions, let's just do a quick recap and see what we've learned so far. So we've talked about income streams and how they flow into the taxable income bucket. We've also discussed credits and how they are a reduction in your tax bill versus deductions and how they are a reduction in your taxable income. We also talked about compliance and what you need to do to comply. File your tax returns and the dates by which the returns need to be filed, as well as the payments need to be remitted. I trust that this has given you enough information to be able to make a decision, to be able to decide whether you would file your tax returns yourself or whether you would require support depending on your situation. But most importantly, I want to draw attention to the fact that you need to plan. You cannot be discussing December 2023 taxes in January 2024 for the first time. There is very little opportunity left to make any decisions. You plan for the year at the beginning of the year and implement the plan in the course of the year. That's the way we get the results, and that's what I'm trying to get you to see at this time. So with all of this information that I've given you, I'm asking, what are you going to do now?